4:03 now. I think we can start the webinar proper, and so that everyone can go for their lunch later. Okay, we are very grateful on behalf of Philips and Poems. We're very grateful today to have Mr. Tong Yu Heng, the CEO, with his team of members from his management to join us today to give us an introduction to the business as well as the first quarter 24 performance. Before I hand over to Mr. Tong for the session, just a brief understanding of the business of netlink. Maybe I can just confirm with Mr. Tong. You own the nationwide fiber broadband network in Singapore that gives us the high-speed internet access, so that we can actually today talk on the screen. Is that right? That's correct, right?
Yeah, that's correct. That's correct.
Yeah. So the box in my house that belongs to you, and then we pay a monthly fee to you via the telco, and the telco will collect the fee and pay it over to you. All right?
Yes, that's correct.
That's correct, yeah. Right? Yeah. So this is just a very layman introduction to netlink, but of course we will probably learn more from you today. Yeah. So over to you, Mr. Tong.
Thank you, Peggy. Very warm welcome to every one of you. Good afternoon. We are very glad that you can join us. I will start off with a presentation. I will go through a couple of the slides, and then my CFO, Diane, will take you through some of the financial highlights of our Q1 results. In total, we'll spend about 10 to 15 minutes on this presentation, and thereafter, we will be happy to take any questions that you may have. Okay, I'll go straight into it. Firstly, to explain a bit more about our business, I'm sure many of you are already familiar, so bear with me. Let me explain our business. We are the fiber to the home operator in Singapore. We own, we build, and we operate the fiber to the home network in Singapore. If you look at this slide, right in the middle of this slide, you will see Netlink Central Office. From a central office building, we will have underground ducts to the surrounding buildings, and within those ducts will be ducts or pipe, will be fibers. So with this arrangement, we have fiberized, or we have fibers that reach all of the residential household in Singapore, as well as all of the non-residential building in Singapore. We operate from 10 central offices across the island to cover the entire nation. So this picture here shows you only one central office, but it shows you the total number of end user we have today. You can see here right at the top left, 1.489 million residential end user using our fiber for broadband internet access. Moving to the right, you have 52,000 non-residential end user. And at the bottom here, bottom right, about 2,700 embed connection. These are connections to location without a postal code. On the left, you'll see 3,000. These are 3,000 other type of connection. It could be from building to building, central office to central office, or other connections that are not within the first three categories that I mentioned. Over to the next page. We get asked a lot about whether our business is future-proof, whether the technological changes in the future will affect our business, and how long our fiber will last. So this is a slide that we put together to address this series of questions. Today, Netlink fiber broadband is the only means of fixed broadband in Singapore. Why is this important? Today, all users in Singapore uses broadband, I'm sure, in two ways. One is mobile broadband. It can be 4G, 5G. One is fixed broadband, whereby you use Wi-Fi at home or Wi-Fi in the office. And Singapore is unique in the sense that fixed broadband is only delivered via fiber network. In many other countries, it will still be a combination of copper wire broadband, fiber broadband, cable broadband, satellite broadband, and so on. And we have achieved a very high penetration rate in Singapore of 95%. And importantly, fiber broadband prices in Singapore are lower than in many other countries. This is important because that means that the demand should be there. Prices is not really the issue for most users in Singapore. Another point to note is that fiber is also a critical infrastructure, not just to provide broadband internet to the home user, office user, but also fiber support other kind of solution connectivity requirements. to connect to hotspot, Wi-Fi hotspot, 4G mobile base station, cameras, and other type of sensors deployed across the island. And on the right-hand side, rightmost, we talk about fiber capacity being highly scalable. What does that mean? The same fiber that we put into the ground connecting one point A to point B could be used to carry 1 gigabits per second. It could also be used to carry higher capacity. The same fiber could be used. So if the technology improved from 1 gigabits to 10 to 25 to 40 or even 100, our expectation is that the same fiber could still be used. So it's highly scalable. It can carry more capacity. And it can support future transmission technology. If there are changes in the type of transmission technology, is not an issue for us as far as we know. Over to the next page. We just announced our result actually last Thursday. Q1 covers the period April to June 2023. So revenue increased by 6.2%. We have a total revenue of 103.9 million for the quarter. We have a total EBITDA of 75 million for the quarter as well. That is an increase of 3.1%. And below this, the lower half of this page, you have see a few key numbers. What is important is that the net gearing remains low at about 23%. The weighted average debt maturity is also good, 3.2 years. What that means is that we don't have any immediate refinancing in the near term. We have no issue with facing a large refinancing. A market capitalization, just a reflection of the unit price. So it's 3.3 billion as at the end of the quarter. Over to the next page. Here is a quick look at the connection numbers. It's always an interesting slide because we are providing connection, so we always look at how our connection numbers are trending. So residential has grown steadily, as you can see over the years, non-resi as well, non-building address point as well, and segment as well. So they have all been growing over the last several years. Over to the next page. Here's a look at our business model. We track the different revenue stream closely. And in particular, I like this slide because it explains very clearly to management as well as to other stakeholders and investors clearly how we make our money. So a large part of it comes from our connection. More than 70% come from our connection. So residential connection, 59.2%, and non-residential about 8%, and other type of connection, 4.5%. So more than 70% come from providing fiber connection. We collect another 6.5% from Singtel, actually from the leasing of the underground ducts to them. On the right-hand side, you see installation-related revenue and ancillary project revenue. These are activity-based revenue that we earn from doing work for others. One quick example is the removal and the diversion of pipes and fiber before LTA, let's say, carry out any construction work. So we will charge them for that. So that's activity driven, and we have fairly healthy level of ancillary project revenue in the last quarter. Moving on to co-location revenue, this will be revenue that we earn from leasing of our space to all the telcos because they have to put equipment racks in our co-location rooms. And central office revenue is a leasing revenue that we earn from leasing of space to Singtel. So all in all, we have these 8 main revenue stream. The first 4 stream come under RAP. These are all concerning our ducts and manhole. These are all regulated, for which we earn a regulated rate of return. And on the right-hand side, the 4 columns, they are not RAP regulated, but they are based on, for the first 2, installation and ancillary project revenue, they are based on services that we provide, and therefore we earn a margin on those services. And the last 2 are contracted with customers, telco customers over the long term. Over to the next page. Our strategic focus have not changed because we fundamentally continue to be a fiber to the home operator in Singapore. So we are very focused on making our network better, improving the network reach, coverage, densify it, and densify it because we want to make sure that we could provide any user in Singapore with a fiber connection more quickly. So we are also working on improving our competitiveness in those segments that are competitive. And we are looking forward to support the whole industry in the upgrade of the network to a higher speed over the next several years. We also continue to look at investment outside Singapore. And another thing that we do is create a better level of brand awareness so that people know what netlink does. I think with that, I will hand over to my CFO, who will give you more details about our Q1 results. Over to you, Diane.
Good afternoon, everyone. Thanks, Yu Heng. This is the Q1 FY24 result, which runs from April to June 2023. And this is an unaudited set of results. We deliver a revenue of 103.9 million, which is 6.2% higher than the corresponding period of last year. And EBITDA is 75.2 million, 3.1% increase. The revenue increase coming from twofold. If you remember the slide on rep and non-rep revenue, 4.1 million comes from the non-rep, which mainly from auxiliary project revenues, and as there are more projects, and these are actually activity based kind of revenue. And on the rep revenue, they are on a steady increasing trend, 1.9 million higher on the back of the higher connection orders. EBITDA margin, EBITDA is 2.3 million. That is because with the higher revenue, we also experience higher operating costs, and so the offset after the offset, EBITDA is an increase in a slightly lower than the revenue increase. EBITDA margin is still healthy at the 72.4%. The net finance charge basically is the interest cost that increased from 3.3 million last year, the same quarter, to 4.6 million in this Q1. And if we can flip to the next page, this represents an effective interest rate of 2.6%. Yeah, this page. So I think 2.6%, although it's higher than the previous quarter, 1.8%, but I consider it still a very good overall hedge rate in the current interest environment. Balance sheet, we have very strong metrics, and I don't think this quarter compared to the year end, which is March 2023, not much changes. The debt remains at 735 million with a maturity duration of 3.2 years, and net debt to EBITDA interest cover 2 times and 16.8 times respectively. These are actually healthy ratios as well. Borrowing at fixed rate remains at 69.4%, substantially hedged. So we don't have actually much of an interest rate exposure, I would say. On the right side is actually our cash flow. So 81.1 million operating cash flow for one quarter. This is also a healthy number. And net cash used in investing activity basically is our capex investment, and net cash used in financing activity is actually mainly our the distribution that we paid on 30th of June, about 102 million. So all in, this is actually, I would say, is still a very robust balance sheet. And I think this is the last page, right? This is the end of our presentation. Perhaps, still have this page. I think this one was our last distribution was based on the financial year audited result, 31st March 2023. So we pay about in total for the year, we paid 5.24 cents of distribution, and this is in a way based on the current price. The yen price, and similar to the current price, is about 6.1% distribution yield. So we compare to the government bonds, etc. I think this is actually, I hope that you're happy with this distribution. And I also want to mention that netlink, since IPO in July 2017, we have returned in total about 1.1 billion to the unit holders, and without calling any equity. So we consider this is a good, hope that unit holders will be happy about it. Okay, is there another page? Okay, sustainability. We actually put up our sustainability report in our annual report, and we make progress on the sustainability over the years. In terms of target, we committed to reduce our scope 1, scope 2 emission by 50% by FY30, and we also committed to achieve net zero by 2050. And we have series of initiatives that are currently in our work plans to work towards this target. Our business itself actually don't create much of waste in the environment, but we still, having said that, we still set ourselves a target of one of the waste is actually the scrap, the fiber scraps. When we lay cables, we probably have some short length cables that we're unable to use, or some cables that is recovered. So we want to reduce this waste, and we set a scrap rate of 2.5% as target, and we have been achieving below this target. And we also have make some progress on the emission, the emission in FY23. Okay, but this may actually fluctuate from year to year until we actually sort out the diesel's invigilance. Worth mentioning here is that we also embark on our TCFD reporting, and we completed a qualitative scenario analysis. So it means that we are committed to the climate change, committed ourselves to make sure that the climate impact, our business to the climate impact is being managed as part and parcel of our operation. On the business practice side, I think proud to mention that we received 5 awards on recognitions of corporate governance and communication. We continue to uphold the highest level of corporate governance standard. And you can see we have 0 cases of incidents or cases of data breach of corruptions. We also, the other one is our people and communities. So we focus on our island-wide coverage and maintain our network availability. You can see it's 100% and 99.99%. We have 0 work-related incidents, and we have also no incidents or reported incidents of discrimination, etc. So all in, I think sustainability is part and parcel of our business and our operations. That's all. Is that right? Okay. Yeah, that's the end of the presentation, and I think maybe we Q&A time, right?
Thank you, Diane, and thank you, Mr. Tong, for your very insightful sharing. Yeah. Okay. Just we can move on to the Q&A session. Just a reminder to the audience, if you have any questions, please key into the Q&A tab, and we will read that out in chronological order, and the management will try their best to answer as many as we can. Okay, but before that, we have a question in the chat. Maybe I read that out first. It says, roughly when may the ICO price regulatory review concluding with IMDA? It is an overhang. Mr. Tong, would you be able to tell us some more about this?
Yes, it's a good question. It's supposed to be completed according to the original timeline some time ago. Certainly, there has been a delay in the conclusion of this price review. It's taken longer. It does not, in my view, it does not affect us in a negative way, because we continue to be able to earn our revenue through the services that we provide. So that's not really an issue. As to whether or not it create a price overhang, it does create some uncertainty, I have to say that, because a lot of investors out there are waiting for the final decision. So I would say we hope this uncertainty will be resolved. It will be anytime soon. We have had a lot of discussion with the regulator on this issue, and I think they will come to a view very soon and give us the final decision. I think it's worthwhile for me to just mention very briefly 1 or 2 reasons why such a delay. What has caused the delay? One of the reasons is the volatility in the market. There's been a lot of interest rate hike increasing. So we have taken a bit longer and trying to convince the regulator that the cutoff date should be moved. The cutoff date to include all kinds of data, inflationary as well, interest rate data should be moved to include more recent data. Another thing is operational costs have gone up for us as well. So we would like the regulator to take into account the increase in costs. As you all will know that operating costs in Singapore for most companies have gone up a lot in recent time. So we also want the more recent data to be reflected, so they have taken longer time. Yeah, I hope that answered the question. Back to you,
see.
Peggy.
Yeah, thank you. Thanks. Thank you. Then let's move on to the Q&A tab, the questions in there. Okay, there's a quite number 20. This first question is, please tell us the lifespan of your fiber, or do you have to replace them after a certain number of years?
Okay, the lifespan of the fiber, you see, a fiber there's always a design life. They are typically designed to last 25 to 30 years. That's the design. But usually in Singapore, from our own experience and from what I know, right, they can last a long time because they are passive. And once you lay the fiber into the ground, protected by the duct, the pipe, right, it can stay there for a long, long time. In fact, the transmission of light to the fiber doesn't cause any degradation because there's no power transmitted. It's just light. So the power, the fiber can stay a long time. It doesn't get affected. It doesn't get weaker. So it will stay. Our expectation is that it will last us a long time.
I see. Okay, that's good. Yeah, the next question is, what do you think of 5G, 6G, wireless broadband, and low orbit satellite comms like those from Starlink and STE? Do they pose a long-term risk to fiber broadband from the consideration of national security and resiliency or diversification of risk?
It's a very good question. I'll give a short answer first and then a longer answer. Short answer is no. That's my view. No. The longer answer, 5G, 6G broadband first, right? Before I talk about the satellite. 4G has been, see, mobile space has continued to evolve, 2G, 3G, 4G, now 5G. Eventually, in 5 to 10 years' time, maybe even 6G. The evolution of broadband, mobile broadband, has always been in parallel with the evolution of fixed broadband as well. So fixed broadband has also increased. For those of us that remember, we always have fixed broadband, but at different speed, right? It used to be very low speed, and now we have higher speed. Or you just look at Wi-Fi technology. Wi-Fi has also moved from lower speed Wi-Fi to higher speed Wi-Fi, and that continue to evolve, and we will get higher and higher speed Wi-Fi as well. And they have always coexisted. I think they serve different purposes, and I think it will continue to be so. When we look at our own personal experience, I think most of us are using both mobile broadband as well as fixed broadband. So I think they will continue to coexist. Now moving on to low Earth orbit satellite, especially Starlink, which is in the news quite a lot. Starlink is targeting the rural areas whereby fiber connections and mobile connections are not possible. I think that's their primary target, as well as other segment like maritime ships, right? Ocean-going vessels, aviation, and all that. That's their primary target. Their primary target, as far as you can see from their website and from the news, is not the urban built-up areas whereby it is well served by fiber broadband, because in comparison, fiber broadband deliver higher speed at a lower cost. The Starlink satellite or any other kind of satellite will not be able to compete with the kind of transmission speed that is provided by or made available by fiber, and also at the same price point. That's not possible. I think somebody mentioned STE here. I suppose you are familiar. You must have read the news about ST Engineering or the Singapore government, or in collaboration with various organization in Singapore, have launched a satellite. But as far as I know, I stand corrected, but as far as I know, those satellites are not for communication, but for imaging. So they are not for communication, they are for imaging. So I do not think that satellite will be a threat. And actually, beyond going further back, beyond the history of Starlink and or STE, satellite communication has been reversed for a long, long time. Since time I would say since time immemorial, but it's not. They have always been there, but they serve a different purpose. So we don't think that it will be a threat for us. Yeah.
Okay. That's good. That's good. Yeah, thanks. Thank you. The next question is, if regulatory review lowers your fiber price to customers, will this impact operating cash flow and dividend? And can you top up any shortfall with debt? I think the
You
shortfall
see,
could be talking about dividend.
yes, our policy is to distribute to the unit holders, our investors, from our operating cash flows. We will not use that to distribute to our unit holders because it's not sustainable. We use that for capex, for new growth capex. We use that, so we don't use that for distribution. But back to this first part of the question about lower fiber prices. Our focus is actually on the total revenue. If you refer to our regulatory model, it is actually based on two main components. One is the total investment that we make. That's called the regulatory asset base, the total investment that we make. As long as we make more investment, then we can earn a higher revenue because the regulator allow a regulated rate of return, currently 7%, right, on what we invested in. So these two components are the most important, the regulated rate of return and the investment that we make. So we are focused on these two components will give us our regulated revenue. Actually, there's a third component, operating costs will be added to that to give us a regulated revenue. So in the first period, first 5-year period, the regulator has decided based on the data we have provided to give us regulated revenue for the first 5 years. That's our target. Fiber prices, connection prices to residential, non-residential, etc., are a derived number, actually, based on our projected number of customers. Then you can work out, actually, everybody should pay how much. So more important to us is actually the starting point, the regulated revenue. So going forward into the next second regulatory period, the second 5-year period, we are also very focused on making sure that we get the right level of regulated revenue. The end user price or the fiber prices or connection prices is just based on regulated revenue divided by our projected number of customers. So we must not forget that actually the number of end users in Singapore using fiber connection have grown a lot. So it will be shared by the regulated revenue in a way, the cost of it will be shared by a lot of more people. So prices will be affected, right? I will not say here now how much it will be affected because I don't know the answer yet, but it will be affected. So, but I'm less focused on that. More important thing is to get to the right level of revenue for the investment that I've made.
I see. I got you. Yeah, thanks. The next question is 510 million of your debt is hedged till May 26 at 1%, is it correct? And assuming a 3% rise in cost of debt, will this raise your interest payment by 15 million? Is it the right assumption?
Okay, maybe I take this question. Yeah.
Yeah.
Becky, maybe I take this question. So it's correct that my 510 term loan is hedged till May 2026. The cost is high, it's not 1%, it's close to 2%. Okay, so as response to your question whether a 3% increase will raise the interest by 15 million, mathematically it is correct. But the question is that do I expect a 3% raise in the cost of debt? I think I personally probably not too worried about it. First, we hedged till May 2026. We have a lot of time to look at the market movements and to enter into looking at options between now till the maturity period. And I think the other one is that we share our balance sheet, which is a very robust balance sheet with low gearing and very good financial covenants. Financial covenants ratios, and also that we have very predictable and stable revenue and EBITDA. So all this been taken into consideration. I think personally, I'm not too worried that netting will be hit by a sudden high increase in interest exposure. And we are now 70% or close to 70% hedged. So we do have time, and we are not rushing into any of the rush decision on the refinancing or worry about the sudden rate increase. So I maybe not too sure that answers your question. Yeah,
I'm sure. Yes, that's very clear. Yeah. Can we take the next one? Are all your charges to end users regulated? If so, how do you expect to grow?
I can answer that. Mostly regulated. The different type of services mostly regulated. There are some that are not. I guess the question is, how can we grow? We are a business in Singapore today. So obviously, if there are growth in the number of connections, then there will be growth in revenue. So there continue to be growth in the number of connection across all our segments, even residential, non-residential, and other type of connections like outdoor connections, building to building connections. There continue to be growth, but we cannot run away from the fact that we have witnessed very high growth in the first 10 years of netlink, let's say, or from 2008, because we are growing from zero, right? Trying to connect every household. Today, all the households are already using our fiber connection. So new increase in connection will only come from new household. You know, as long as Singapore government continue to build, and private sector also continue to build new housing unit, then there will be growth in the residential segment. The growth rate has always been around the 25,000 number of new housing units, right? So we expect that to convert at some point to fiber connections. We are working on other areas which we hope will give us a better growth rate, the outdoor location and so on. So there will be growth. But I have to say that the growth will not be as strong as the initial years, right? Because that's a fact. That's a fact, yeah.
Yes, that's clear. Yeah, thanks. The next one is regulatory review. New prices supposed to change by 1st of January 23. What happens if new price only implemented in 1st of January 24? Then the 5-year price window has ended. Is that right?
The current price will stay until the new price take effect. Assuming the new price take effect 1st January 2024, I say assuming because I really don't know. It could. Then yes, then the 5-year price window will be from 1st of January 2024 onwards. There'll be a new price window. Yeah.
Okay. Okay, thank you. What is the outlook for ancillary project revenue? What would drive those revenue?
I think it is based on Singapore economic growth indirectly, as it's actually based more directly on the level of construction activities, right? If there's a healthy level of construction activity, there are more infrastructure being built, like MRT trains, new other type of facilities, then usually there will be more ancillary project for us, right? So far, last year, this year have been healthy. I think on our books, this year so far, up to this point in time, I think it remains healthy. So my expectation is that this FY24, it will be healthy. I cannot go into specific because it's activity driven, and it will vary year to year. But for last year and this year, I think they are at a healthy level, higher than say a few years ago. Yeah.
Thank you. Thanks. The next question is a bit. I'm not sure. It says your share performance has not been promising. Why so? Thank you. Or do you know of any?
It's a very good question. To be honest, it's a good question because we also look at it. If the share price affected, is there anything we can learn from it? I think there is one main reason. There are probably a few other reasons, but there's one main reason. One main reason, our share price as well as the share price of all the other business trusts and REITs are generally affected because of interest rate hike. All of the yield play, which we consider the yield play, all trade at a premium to the risk-free rate. Let's say it's 10-year Singapore bond, government bond. So most of us, I'm generalizing a bit, most of us are trading at maybe 2 to 3.5% premium to the Singapore government bond. So if the government bond interest rate increases, then the expectation of the yield for netlink as well as other REITs will also increase. Then the price will drop, right? Then the price will drop. So it's moving with the interest rate. So we are all affected by this interest rate movement. So because the alternative to investors is that they could invest in a government bond, which is risk-free. If risk-free is 4%, then netlink cannot be trading at 5% yield, right? Which is why today we are trading at 6% yield. At some point in time, we were trading at 5% yield because the risk-free is much lower, below 3%.
Okay.
But today it is not. Yeah.
Okay. Yeah, that's clear. Yeah, thank you. The next question is under RAB, ducts and manholes are depreciated over 35 years. What happened after 25 years? Do you need to replace the ducts?
We do not need to replace the duct, right? As long as the duct and fiber can continue to work, they will continue to be in use. So we will not have a major capex expenditure just to replace all of the ducts. But because the regulatory framework allows us to recover the cost of our investment over a period of time, some 25 years, some 35 years, but I will just use 30 years as a blended number. So whatever we invest today, we will recover the cost under the framework over 30 years. So after 30 years, when we have completely recovered the cost of our investment, earn a margin on that, we will not be able to generate further revenue, earn a return on that. So then our revenue will be affected, right? After the 30 years period. It depends on the amount of investment. So every year when I make investment, the investment will allow me to earn a return over a 30 years period. So that's how our formula works.
Oh, okay. That's it. Yeah, thanks. Does the long useful life benefit netlink because the asset base can stay high to earn a WACC return?
I
The
would say
average
yes.
cost of
I think the
capital.
short answer is yes. Yes.
Oh,
Yes.
okay. So this useful life is really determined upfront between you and the regulator, right?
Yes. Firstly, is the design and the technical feasibility, right? Or naturally, the regulator, when they decide on the regulatory asset life, because regulatory asset life to determine how long I will take to recover the return, but it's tied to the useful life also, generally tied to the useful life. But I have said earlier, we believe that actual useful life can turn out to be longer than the regulatory depreciation life.
Oh, okay. Yeah, thanks. Then as you roll out new connections, the rollout of new connection is slowing down. You mentioned before. Is there room to further do some cost optimization?
Definitely, every corporate will have to look at cost optimization in view of rising operating costs. So this is something we will look at. But it's not always easy to do, right? I think in areas whereby we can automate, we can reduce headcount because we automate, then we will do that. I think in areas whereby we could eliminate certain processes, I think we will do that. In areas whereby we can get more competition from our vendors or supplier, we will also try to do that. So I think it's always an ongoing thing. It's not just now. It has always been there. It's something I think my CFO and I and the management team will always look at cost optimization, something that we will continue to look into. Yeah.
Thanks. Would you move to quarterly distribution?
We have considered that. Some investors have asked us that. We are not doing that because I think half yearly is quite a good frequency every 6 months to do the distribution. The main reason is that every distribution costs us close to $100,000 to make. We had to spend $100,000 just to make a distribution. I think investor may not want us to spend so much money to make distribution. Right? Yeah.
Oh, okay. Yeah, that makes sense. Yeah. Can Singaporean buy netlink trust using CPF? Since the dividend yield is higher
Unfortunately,
than
no.
CPF.
Unfortunately, no. We have gone to CPF and asked CPF why not include us in the CPFIS scheme, right? CPF investment scheme. CPF has not decided to include all of the business trusts. So you see that it's not netlink per se, it's that all business trusts are not included. We did ask CPF why they don't include all the business trusts. They say they have no plans. I will stop here. I cannot speak for CPF, I can tell you we have gone to CPF more than once. I've gone to CPF more than once. I say, why not? But they say, oh, we have not included business trusts and we will not include business trusts. They have no plans. Basically, they have no plans to include business trusts. So unfortunately, you can't buy netlink using your CPF.
Given a low effective average interest rates, in first quarter of this 24, it means that the debts were hedged, but as loans get rolled over, does it mean that locked fixed interest rate for future periods are higher? And thus, to expect higher interest costs in future periods?
Okay, so we have about 70% hedge, right? So of course, if we draw down further, if we draw down loans further, means the portion that is drawn down will increase. So the ratio of hedge will reduce. And the new drawn down loans, any new drawn down loans will be at the floating rate, which will be higher than our effective interest rate at the moment, about 2.6. So the answer is yes, but since I have already 70% hedge, right? So I guess the incremental drawn down and the increase due to the incremental drawn down would not be significantly change the overall effective interest rate. That's what I'm saying.
Thanks.
Mm.
Are data centers one of your direct customer segment? Every state, do they have to have your fiber?
Today, we provide fibers to data centers as well. Data centers, Singapore has many data centers, and we are not the only one providing fiber to the data centers. I would say this, right? Because they could buy from anyone. And usually data centers, they like to, whether it's the data center themselves or customers within the data centers, they like to buy connections from multiple sources because they like different connectivity and they like resiliency. So it's quite natural for them to have a different supplier of fiber connection. Yeah. So they are some of them are my customers as well, but they buy fibers from a lot of different people.
The next one, I think this is trying again. Please share your view on the impact of IMDA review. Thank you.
I think yeah, it's similar, but approaching it from a different angle. You see, the thing is, obviously, if it's a bad decision, then the impact will be negative, right? I'm not saying that it will be a bad decision. So it's very important for us. This is something that we know. We have always been managing this relationship with regulator, and also to manage this risk over a period of time. So what we do to manage this risk is to make sure that when we invest very prudently and efficiently to meet the needs of Singapore, fiber infrastructure in Singapore. So we believe they have done that very well. We have not over-invested. We have always been careful to calibrate this, and also to have a very good open dialogue with the regulator over time, right? Not just during the review period to discuss various issues, because regulator will finally have to decide also on the regulated rate of return. And they are guided by certain principles that they have laid out during the first price review period. And as far as we know, they will continue to use those principles, which is good to guide them in making the decision for the second round. So I think overall, the relationship with regulator is good, and the progress, I would like to say, is reasonably good, and an answer will be known soon. I hope it's all within our expectation. There are no indications so far that it will not be. That's all I would say. Yeah.
Okay. Thank you. Thanks. So I think the next question is probably related. What is the status of the regulatory review? You mentioned just now it's in progress, right?
Yeah, and the outcome will be known soon. Yeah.
Okay. I think next one is again coming back to the cost of debt. Will the cost of debt increase further? If so, by how much do you think you?
Yeah. If you ask about the market, then I think there's a lot of articles, reports out there. I mean, everybody can have this view, right? Some believe interest is peaking, but I think inflation coming down, but have not hit the range that the target. So Fed is still increasing its interest. So all this, everybody can have this view. But as in the business ourselves, we want to lock in our interest as much as possible so that we are not exposed to a volatile interest rate environment. So I would say that, again, I think we're lucky that we actually lock in substantially the 5-10, and we lock in a very good rate. So that's below 2%. So any incremental drawn down or increase in the interest rate will not impact us it significantly, I would say, in the near future, because my maturity for that is actually the next 1-2 years, FY24, FY25. I don't have a worry about refinancing is due. So we do have headrooms, and we do have time to look at the market and to evaluate any refinancing or financing strategies. So we are quite comfortable with that. By increase by how much, I guess is just probably anybody's guess.
Okay. The next question is, the Singapore government paid for the initial fiber installation. How is this recognized in your finances?
I think, okay, it's not entirely correct that they paid for all of it. There was a subsidy of in which we received $732 million from the Singapore government. Initially, there was a set of targets. As long as we meet those targets, we will be paid. So we were paid milestone payment. But in total, we were paid a total of 732 million by the Singapore government. So and those amounts we have already spent, right? Because we spend more than that to invest in the network. And what the regulator does is whatever that they have paid for, obviously it's not included. We can't recover for on those part that they have paid for. So that is subtracted from the total asset value that that they have already paid for. So I think it doesn't affect our regulatory framework, and all that is it's clear cut. It will just be all those amount that we have paid for ourselves that is invested into the network. I hope that answered the question. Yeah.
Yeah. So basically, what the government paid for is not even recognized in your books at all. It's not part. It's not the
Financially, sorry. Diane, I can't remember. It's stated in the books, but it's not included in the regulatory asset base. That's what I'm going to say. Yeah.
Oh, okay,
Yeah.
okay.
Yeah.
Yeah.
We will have
That's
to
clear.
disclose that now, right? So it's disclosed, yes.
Yeah,
Yeah.
that's clear. That's clear. Yeah, thanks. Just want to understand what can be the replaceable alternative solutions to fiber network. For example, satellite direct link. Is that a right statement? That this satellite
I
can
think
replace?
obviously there are different communication technology, including satellite and all that. And in some countries, let's talk about US. I think a good example, right? In the US, depending where you stay, you could have fiber broadband, you could have cable broadband, you could have satellite broadband, you could have mobile broadband as well. Just using mobile broadband for your internet access, because it's a big country. So there will always be a combination. But in Singapore, because we are so densely populated, very urbanized, and everybody has fiber to the home. So for users that have fiber to the home, very unlikely that there will be other technology that replace this fixed network, because it's not cost effective. Satellite is not cost effective compared to fiber. So we don't see that as a threat and apart from satellite, we don't think there's anything else that will replace it, right? The fixed fiber broadband for home user. Yeah.
Yeah, thanks. That's clear. What is the growth in Singapore for the next 5 years? Any venture to overseas for expansion already happening for netlink? If yes, please provide some updates if there is.
Okay. I will answer the second question first. We are looking into overseas investment, but to your question whether anything is already happening, we have not closed any transaction. I think so the answer will be quite straightforward there. What is the growth in Singapore for the next 5 years? I presume you're referring to the growth in our revenue for the next 5 years. We have reached I would say that the growth will not be very high. I will be very frank, because it's determined by the number of new connections that we have achieved or we can achieve. And I would refer you to our historical number over the last 3 years. If you look at the growth rate over the last 3 years, that will give you an idea of the kind of growth rate that we can achieve in Singapore for connections. So we have been growing at a low single digit. That will sort of be the kind of growth to be expected in Singapore, unless there is some other new development, right? So we will have that steady growth, but it will not be a very high growth in Singapore.
Okay, good, thanks. The distribution per unit is above 100% compared to earnings per share. Is this sustainable for a long time?
Okay, a large part of our, you see, earning per share come after our depreciation, because we have invested a lot in the network. Our annual depreciation is more than 100 million, I think 170 million a year, if I get the number right. So very significant. So you minus that, then your net profit will be lower than the amount of distribution that we make in total. So, but to your question, is it sustainable? Whether the distribution is sustainable depend on our ability to generate sustainable cash flow over the next, let's say, next 10 years or next 15 years, right? We think we will be able to do that because we generate a cash flow higher than the $200 million that we distributed last year. And we not only generated more than the $200 million that we distributed last year, we use some of the cash flows to invest in our asset as well, growth capex. Although we did borrow some amount to fund our growth capex, but if you look at our balance sheet and our cash flow statement, you will be able to see that we have consistently generated higher level of cash flows than the distribution we make. And now that level today is very reasonable. So if you project that further out, you will have to draw your own conclusion, but you project that further out, I would say we are very sustainable.
Thanks. The next question, in the National Day speech, Prime Minister talked about refitting HDB for the new super aged society. Any future impact to Netlink Trust for this? Or is there any involvement or more business for Netlink in connection
Not
with this?
directly. I think not directly, because all the household already have a fiber connection, and a lot of users are already using the fiber connection for broadband. We don't think there will be any direct impact foreseeable future.
So if there is a big capex like a network upgrade, what is usually your source of funds?
Two sources. One will be our cash flow. I mentioned that we have generated a high level of cash flow. The other one will be by debt. We still have a relatively low level of debt, so no problem. We're borrowing more money to fund any network upgrade. Yeah, so not an issue for us.
So, I think this question again, talking about growth. Where do you see future growth coming from? Do you have plans for M&A in overseas markets?
We do. I think future growth will come from our core business here. We continue to see growth here, even though I said that the growth will be stable, may not be very high, but it will stay steady growth in Singapore. We will also look at M&A and development overseas, but we will be very cautious because we want to make sure that we get into development that are not of very high risk, because there's no point in getting into very high risk and put too much money at risk, right? Then our investor will also not be happy with it.
Okay. I think the next two questions are somewhat related, so maybe I can combine them actually. Yeah, the first question is, given your current high penetration rate of over 90%, how do you address your future growth when new housing units coming on stream, especially in the HDB sector? Is that good for you, or does it mean a slowdown? And also, if it's a slowdown in construction projects, does that also mean that your growth rate will slow down as well? Then the second question is, for this new HDB, will they come with fiber that's already automatically linked up, laid by you?
I think all these questions are good questions, all about our growth, which I also addressed just now. The residential segment in particular will be dependent on the number of new housing units, HDB plus private. So I think we all know the statistics are out there that consistently, I think we have been averaging around 25,000 units, some year more, some year less. So that will be sort of translated to our growth number eventually. But still, relative to the total we have today, 1.5 million, it's not a very high level of growth. So we have to have other sources of growth. There will be growth coming from non-residential as well as other type of connections. But added together, I have to say that the level of growth will still be stable and not will also be in the low single digit. I have to say that. And for new housing estates, new private or HDB, the fiber actually will be included by the developer within the homes. We connect outside the home now because when they build the house, just like electricity, socket, electricity wiring, water pipes, all are provided by the developer. So fiber is also, internal fiber is also built together with the building. That make it easier for us to just connect outside. Yeah.
Oh, okay. Yeah, understand. Yeah. What are the pricing, charging models for the various types of the businesses that you run? Like residential is simple, we can understand. But what about commercial? How do you price and how do you collect your revenue?
Oh, they are all regulated. So when the regulator determine in the price review, determine how much we need to earn per year because of the investment we have made, they will allocate it to residential and non-residential, let's say, for example, businesses. And then they will work out the price. So today, the price for businesses is $55 per circuit. So it's all determined and regulated.
Oh, okay. Got it. Yeah. And the next question is ST Telemedia targeting your residential and business customer also? I think they have some fiber broadband network. Is that
Not
correct?
ST Telemedia, but I suppose you may be referring to StarHub, let's say. StarHub has some fibers and they serve business customer as well. So we are not the only one in the business segment. StarHub, Singtel, ourselves, we provide fiber to the business segment. So we will be competing with one another in providing fibers to the business segment. In the residential segment, we have the only island-wide network in Singapore.
I see. So I think it's connected to this question. Maybe I read it out. Just a follow-up for data center connection. You said there could be other vendors. So who are these vendors that are competing with you?
Okay. We are the sole nationwide fiber to the home operator, yes. But we are not the only telecom operator with fiber in Singapore. Different. Fiber to the home means fiber connecting to all the household. We own that network. Nobody else has a network that covers the entire country like that. But before we started in 2008, there were already fibers. Other telcos, Singtel, StarHub, and actually a few others, they have fibers connecting certain businesses. They already have a fiber network. So we do compete with them. There's also SPTel. They provide fibers to data center as well. So there are other fiber operators. It's just that apart from ourselves and Singtel, the rest of them will not have such a comprehensive network.
Okay. Understand. Yeah. Thank you. Thanks. So I think this more probably a critical question is what's the worst case scenario in a data breach for you? What is the impact or even the likelihood of any data breach happening for your business?
We hope it will never happen, but in this day and age, we all know that the cyber threat is there and is very real. So we take this seriously. Firstly, we try to minimize the amount of sensitive data that we hold to the extent possible, so that not much can be lost in a way. Secondly, obviously, we have to build up the defenses. So it's an area like every other corporate. We spend a lot of time and money to make sure that it will not happen to us. What is the worst case scenario? It's very difficult to paint that scenario when it has not happened. We hope it will not happen. We will have to continue to invest, I would say, to make sure that our defense is good, and also continue to review how to ring fence those data and minimize the data, right? Don't put everything together and don't record and keep everything that we don't need also, especially sensitive customer data. And we don't have a lot of sensitive customer data. So I think it's a happy situation because we don't have a lot of, we don't keep a record of all your bills, what you do with your circuit and all that. Those have nothing to do with us. Because we are not a retail service provider.
Okay. Sorry, it's already past 1 p.m. You've been very generous with your time, Mr. Tong. But can you maybe take one last question from this? I think this one probably most relevant. AI seems to require new data center infrastructure. Have you seen such inquiry from customers and whether it benefits you in this AI?
I think the statement is correct. I agree with that. AI will need more new data center infrastructure because you need a lot of processing and a lot of data to be processed and all that. But we are not in the business of a data center directly. We are at the core a fiber's connection provider. But any improvement in technology, new technology, adoption of technology generally is positive for our business because all of this technology and development, whether there is more data centers or other more applications, generally will drive up data traffic and connectivity requirements. So I would say all of these development are generally positive for us, but we may not benefit so directly from it or so immediately from it because it depends, right? Because data center will only need certain number of connections, but it's generally good. So we are happy if there are more data center requirement, more connectivity requirement. But customer will not come to us directly to build data centers. We don't build data centers for them. We are not directly in that business.
Okay. Yeah. Thanks. I think that we passed 1 p.m. Thanks so much, Mr. Tong, for taking so much time and the patience in answering so many questions, and Diane as well. Yeah. You have any closing remarks for us, Mr. Tong, before we close this session?
Actually, no. I think the questions are very good. We have a lot of questions. I hope we answered those questions. And I'd just like to thank everyone that have joined us. We have a very good attendance. I'm very happy to see so many people interested to learn more about netlink. We hope we have answered your questions. And we do hope that you will join another of these sessions, whether it's through Philips or through others. And we'll meet you the next time round. Thank you.
Thank you very much. Thank you, Diane, Mr. Tong, and Victor and Annabelle. Thanks very much for your time, and thanks to all the participants for taking your time to be with us. Thank you again. Yeah, have a good day.
Thanks, Becky. Thank you, everyone. Yeah.
Thank you. Bye.
Thank you. Thank you, Becky. Thank you.
Thank you.